Well, officially good morning and welcome to our webinar this morning on JobKeeper 2.0. It's lovely to have you all with us today and on such a beautiful Sydney day as it is. So today we're looking at JobKeeper 2.0, how you will you actually get it and how you apply for it. So we'll be having a look at the ATO revenue test that you need to satisfy, how you can continue to get JobKeeper if you're already registered, and also if you qualify now and you haven't qualified previously, because that actually does apply to a number of businesses. I've got some tips for you at the end of the presentation and plenty of time for your questions. So please post your questions as you go along or save them towards the end of the presentation is fine. If I don't get to any of your questions today, then we'll just drop you a quick email or speak to you after the webinar. My name is Jenny Wilcock and I'm a director at Sullivan Dewing, Chartered Accountants and Business Builders based in Caringbah. We continue to have a huge response to these webinars. We know this is really, really important information for you and information that may well keep your business afloat for the next 6 months. So we're aiming to educate you as much as we possibly can with the information that we have today. On the 21st of July, the Australian government announced that the JobKeeper payments would be extended until the 28th of March 2021, so a further 6 months, under a tapered payment system, with the rate being dependent on the hours worked by the employee. So different to JobKeeper 1.0, which has been a flat rate for everybody, we now have tapered rates depending on the hours worked by the employees. The JobKeeper support package on its own is the single largest piece of government spending in Australia's history. That's fairly monumental, isn't it? With the combined effect of JobKeeper 1.0 and 2.0 estimated to cost the federal government $101 billion. A significant amount of taxpayers' money have certainly gone into JobKeeper. I must say, good, by all reports, it certainly has kept a lot of businesses going. It has kept a lot of people in jobs, and it certainly has got a lot of people over the hump that we've had while we've dealt with this COVID-19 pandemic. I'll shortly share our presentation with you, and next to, on the bottom of your screen is the chat box. As I mentioned, post any questions that you've got on your chat box. I can see that people are saying that they can hear us clearly, which is fantastic. All right, let's get into it. Okay, so what you can see now up on screen is the PowerPoint presentation. Now that has been emailed to you this morning already, so hopefully you have that in front of you as well. Okay, JobKeeper 2.0, will you get it and how to apply? A couple of little housekeeping matters before we start. As mentioned, any questions that you've got, let us know as we go. We'll come back to you at the end if we haven't answered it. And of course, you've got the presentation slides already. All right, so what are we going to cover today? We are going to cover how you qualify and what we know about that at the minute. Now, I will just say up front that that legislation is still being written about JobKeeper 2.0. Even as late as last night, some further details came out. So I've perused those very early this morning, and I'm comfortable that we've covered those details. So we're still waiting on the ATO to release a lot of documentation onto their website, but that will be imminent now that the legislative instruments have been released. So if anything new comes out, we'll certainly advise you of that. But in today's presentation, we certainly have the nuts and bolts of what you need to do. So how to qualify, what we know now, we'll have a look at the additional decline in turnover test, a guide to the new JobKeeper payments, who the eligible employees are, some key dates, and also some tips and tricks for you on how to make JobKeeper 2.0 work for your business. Okay, how to qualify. So, JobKeeper 2.0 starts on the 28th of September and finishes on the 3rd of January. What we know is more employees now qualify, and that primarily arose from the extension of the eligibility date until the 1st of July 2020. So, if you've got an employee that you had employed now before 1 July 2020, they are now eligible for JobKeeper, so long as they're not currently nominated by another entity somewhere else. You can enrol for JobKeeper anytime until the program closes if you meet the decline in turnover test. So I've got clients certainly that that were only eligible starting August. So we've made the first claim for them in the September declaration. So absolutely keep your eye on your numbers. Even if you qualify for the month of September, I would certainly be registering for JobKeeper 1.0 before you even start to look at 2.0. So just know that you can enter the program at any point so long as you meet the decline in turnover test. JobKeeper 2.0, we will have 2 tiers of payments depending on the hours that the employee works. So what are those tiers? In the first 3-month period from the 28th of September until the 3rd of January, we have tier 1 and tier 2. So tier 1 is $1,200 per fortnight, tier 2 $750 per fortnight. Now, we know that when you pay the JobKeeper out, that's pre-tax money. You have to tax that when it goes to your employees through your payroll system, as you normally do. The same rules apply as previously. If you are paying your employees more than, let's say, the $1,200 per fortnight, then you continue to need to pay super on those payments. If your employees are stood down because you have no work and you are simply paying the $1,200 as a JobKeeper top-up, then there is no super on those payments. Same thing applies to the $750 rate. If you have any questions about that sort of thing, just come to us separately. Okay, so then we go into the second 3-month period, which is the 4th of January until the 28th of March next year. And our tier 1 drops to $1,000 and our tier 2 drops to $650. So you can see that the government's trying to wean us off JobKeeper by staggering these payments down over time. Okay, then we come to the hours test, and this test is going to be where a lot of questions arise, I have no doubt. So where you have an eligible employee that works more than 80 hours in a 4-week period. Now, there's 2 4 weeks that you can test on. You can test on the 4 weeks before 1 March or the 4 weeks before 1 July this year. So you need to make sure that your employees have worked greater than 80 hours in that 4-week period for them to receive the higher rate of JobKeeper at the $1,200 per fortnight. So there are there's some extra rules around that, which I'll cover shortly, but the main rule is the 80 hours, or call it 20 hours a week, 80 hours in the 4-week pay period before 1 March or before 1 July. That is for employees. Okay, now if you have employees that work less than 20 hours a week or less than 80 hours in the fortnight, then that's okay as well. It's the same testing period, pre-1 March or pre-1 July. They receive the lower rate of $750 per fortnight. So golden rule, greater than 80 hours, you get tier 1, $1,200. Less than 80 hours, you get tier 2, $750. So what will happen is that you will need to be advising the ATO which tier your employees fall into. So if you've got, quick example, if you've got a payroll of 20 people, you might have 5 that fall into tier 2 and 15 that fall into tier 1. So when you actually, through your payroll system, and when we make the declarations is when we advise the ATO which tier your employees are eligible for. Okay, so as well as employees, we have eligible business participants and sole traders. Now, we still have the same hours test, and what these category of people have to do is they need to provide a declaration to the ATO to support that they have exceeded that 80-hour test. Now, their test is only in February 2020. They have no test in June 2020, like employees do. It's only February 2020. So what the ATO has said is if you have worked greater than 80 hours, then you need to let us know via a declaration. If you have worked less than 80 hours, so long as you continue to satisfy the drop in turnover, you don't need to let us know. So if you want the $1,200, you have to provide the declaration. If you can't meet the 80 hours, there is no declaration. You simply just apply for the $750 when we launch that monthly declaration for you. Okay, so as mentioned, so businesses need to nominate the rate they are claiming for each employee. Now, an important point to note is if you've got employees that are already receiving JobKeeper, that have already filled out the relevant paperwork for you, that you have already advised the ATO through your payroll system that they're receiving JobKeeper, you don't need to reassess their eligibility to move into JobKeeper 2.0. It would only be for any new employees that were coming on that you assessed whether they were eligible or not. Now, this is a really, really important point. Businesses are still required to pay workers first before being reimbursed from the ATO. So we have the system, it's called the wage condition. So the ATO says you have to pay your people before we will reimburse you. So this is going to become quite important as we move towards the end of September and into FN 14, which is the first fortnight in JobKeeper 2.0. So as a business, you need to very quickly assess your eligibility after the end of September. So I would suggest that you absolutely do not wait until your September BAS is due. September BASs are not due until the 28th of October, or if you're lodging through a tax agent, the 25th of November, because of the requirement to meet the wage conditions. So essentially, as soon as you know your September revenue and as soon as you can get that bank reconciliation done and your accounts up to date for the end of September, then we need to assess the eligibility and compare September 20 back to September 19 BAS quarters and work out whether you're eligible. And the reason that this is so important is because if you delay and you're not sure if you're eligible, and if you haven't paid your employees the minimum amount and met that minimum wage condition, then none of your employees will be eligible for JobKeeper. I've got some more information on this coming up, but please, let's take that very important point. We must assess very quickly so that for our fortnight 14, we have paid our employees the correct wage by the 11th of October. So we only have between 30 September and 11 October to assess, to pay our employees, to make sure that we can get the payments back from the government. So what's really important is this one in, all in rule. And if you test too late, you've got two risks. If you test too late and you later find out that you weren't eligible for JobKeeper 2.0, and you've already paid that money out to your employees, you will have no ability to recoup those amounts from your employees. So really important. So if you think that you're eligible, you've paid your wages out to the employees, and later you work out that you just missed out on that 30% drop, then you can't get the money back from your employees and that money's gone. So the other really important point is the one in, all in requirement. So what the ATO says is that for you to receive JobKeeper payments back from the ATO in a fortnight, you must have paid every eligible employee that you have the minimum amount that they're required to be paid. So the $1,200 or the $750. And if you don't, if you've got one person that you've missed for whatever reason, you meant to do the JobKeeper top up and you didn't, if you miss even one of your eligible employees, then your business is not eligible in that fortnight at all. Nobody can get it. And that can mean thousands and thousands of dollars lost. So that one in, all in rule is really important. So just recap, because this slide is very critical to you. So we must test quickly, because if you pay the wages out and you're later ineligible, you will not get them back. And the second very important point is we have to make sure that you are paying every eligible employee. So you have to know for every employee, when they started, are they eligible, what the requirements are, and make sure that you have paid all of them and you don't miss any out. If you miss out, no one gets it. Pretty harsh, but that's how it is. Okay, let's have a look at our decline in turnover test for JobKeeper 2.0. So what the government has stipulated and what the ATO is looking for is a fall in actual GST turnover of greater than 30% for the September 20 quarter versus the September 19 quarter. So note we say quarter. So the same test will apply when we look at the second 3-month period and you are testing December quarter 20 versus December quarter 19. Now, this is very different to the first testing for JobKeeper 1.0 that we had, where you could assess your business on a cash basis, you could assess your business on an accruals basis, you could estimate your future revenue and assess on that basis. None of those apply now. What applies now is whatever system you are registered under for your BAS. If you are registered for cash, then you're testing on a cash basis. If you are registered for BAS as accruals, you are testing on an accruals basis, and there is no pre-forecasting of revenue that can be done. So what is critical is that you go and find a copy of your September 19 BAS and you check the basis that you're registered, be it cash or accruals, and you start to be having a look at what your numbers are for this September 20 quarter compared to that September 19 quarter. If any of you can't find your BASs for September 19, just come back to your client manager at Sullivan Dewing and we're happy to give you to get you a copy of that BAS. But the rules are quite clear. It's September 20 BAS versus September 19 BAS, and that's it. So basically the way that the ATO is going to get you to calculate it is on your BAS is a field called G1, and that field is your GST inclusive income. So you need to look at G1, and there is a second field called 1A, and that is the actual GST that's included in the numbers that you have at G1. So what the ATO is going to do, and we'll have a look at this example here. So this is just some snips off a client's BAS. So what we have, and let's pretend this is the September 2020 BAS. Of course, that's not correct because September's not finished, but let's go with it. So in the September 20 BAS, this client had G1 sales of 398,000. Now that amount includes GST, and then we have a look down here at 1A, which is the GST that is included in their G1 sales number. So the very simple calculation that we do is G1 revenue less 1A GST equals the number that we're testing on. So our 398,000 to take off our 36,000 equals our 362,000, which is the number that we need to compare the same period 12 months ago to. So flicking over to the September 19 BAS, we had revenue of 944,000. Included in that revenue was 85,000 worth of GST. So our net revenue there is 858,000. So when you deduct the two and work out the test of the 30% decline, what we can see is that our September 20 revenue is 58% of our September 19 revenue. So we have declined greater than 30%. So simple calculations, but calculations that we have to get right. Okay, so it's all based on September 20 BAS versus September 19 BAS. Take your GST out. Now, you might have a business that that doesn't pay any GST. You might have a business that is GST free. So it's the same equation. We've got our G1 revenue. Your 1A might simply be nil, but you still minus 1A from G1 to get your net sales amount, and then test that against the prior corresponding net sales amount to work out your decline. Okay, now we will be doing this test for our clients. Certainly if you have any questions, just come to your client manager, absolutely. Okay, so the same principle applies when you're testing December. G1 minus 1A will get you your number, and then compare that to the year before. So we've prepared a few little documents that give you some summaries around what you need to do, and this is one of them. Now, these documents we have posted through our Facebook page, so you can certainly see them there. There's actually 3 separate pages to this document, which will come through in this webinar. If you want a separate copy of these pages, because they're quite handy sort of little charts to have printed out and stuck up around your office, just let us know. We're certainly happy to email them to you. So our little snapshot here shows you basically for the 3 relevant time periods what you need to do to calculate your decline in revenue. So we understand the March to September, that's the rules that we're currently operating under. Then we have our next period, which is September to January, and that's where we are comparing September 20 to September 19, and we're looking for 30% reduction. And then when we look at January to March, you have to retest based on that December 20 revenue versus December 19 revenue. So a little snapshot for you there. Okay, so you might remember with JobKeeper 1.0 that we used some alternate tests because our basic tests of September BAS versus September BAS or December versus December might not be applicable for your business if, for instance, you hadn't started your business back in September 19, or if since then you might have had substantial growth because you've bought another business or you've changed your business structure or you've expanded dramatically. So the alternate tests that applied to JobKeeper 1.0 will also apply to JobKeeper 2.0. And I would suggest if you're using those alternate tests, then you certainly should be speaking to us because they are quite finicky, and it's very important that we get this testing done correctly to make sure that you actually are eligible. I have no doubt that the ATO will come out and clarify the alternate tests even further, so we will let you know as that happens. Okay, so let's have a look. This is one of our second snapshots. So this is the summary between the 3 time periods of what you get and what hours you have to work. So we've just got the flat 1,500 until the 27th of September. And then September to Jan, we've got the 1,200 if you work greater than 20 hours a week, which has to be tested, as I said, in 1 month before 1 March or the 1 month before 1 July. If we don't meet the 80 hours, then we are down to the $750 per fortnight. From 4 January, that drops to the $1,000 and the $650 with the same time test. Okay, so something again for you to refer back to. Let's go through the employee eligibility. Okay, so the employee needs to be employed by an eligible employer. So first up, the business needs to be eligible based on those turnover tests for JobKeeper. Then the employee has to be currently employed. Now, they needed to have been employed as at 1 July and to have been full-time, permanent, part-time or a fixed term employee by 1 July to be eligible for JobKeeper. Now, if they were a casual, a long-term casual, and they were with you as at 1 July, they needed to have been a casual working in your business on a regular and systematic basis for at least 12 months as at 1 July. So what we found when the government first announced these rule changes to expand that employee eligibility, we found that we had a number of clients that had casuals that didn't meet that 12-month test by 1 March, but they did meet it by 1 July. So we had a whole lot of extra employees for various businesses now eligible for JobKeeper, which was really fantastic. So just be mindful of that about your team members. If they're casuals particularly, have they ticked over that 12-month mark by 1 July to be eligible? So they need to be over 18 years of age, and this is the measures that the government put in place to stop the 16 and 17-year-olds that work at the local chicken shop from being eligible for $1,500 a fortnight. They thought it was fabulous for the 5 minutes that they could get it, but certainly not eligible for it now. So your employees needed to be 18 as at 1 July 2020 unless they are financially independent. So financially independent could certainly apply to the apprentices, to someone particularly that's moved out of home that is reliant completely on their own finances. Now, this is something that's come to light that I'm not sure that many people know about. So if you put a new employee on today, so we're after 1 July, so we haven't met the 1 July criteria that they needed to be employed by you. But if that new employee that you put on had been working for another business that was receiving JobKeeper and they were receiving JobKeeper through that business, if you put them on now and you are entitled to JobKeeper through your business, then you are able to claim that JobKeeper payment for that new employee. So I've got a number of clients that quite surprisingly are having growth spurts at the minute. We have an interesting world at the moment. Some people are flat out and some people are still really struggling with COVID conditions. But if you have recruited and you are eligible for JobKeeper and that employee was receiving JobKeeper from their past employer, then you can claim JobKeeper for them. So something certainly to keep in mind when you are recruiting. Okay, some key dates. Now, this page here is actually one of the most important, I think, pieces of information that you can have, and it certainly is something that we here refer back to very often. So this shows you the dates for JobKeeper 1.0 ending on fortnight 13, which is the 27th of September, and that is applicable for the $1,500 per fortnight rate. We then flick into the first period for JobKeeper 2.0, which starts with FN 14, finishes with FN 20. So starts 28 September, goes to the 3rd of January. And what's really important is that we make sure within each of those fortnights that you have paid that minimum amount out to your employees, whether it's the $1,200 or the $750. Those dates are really important. Sorry about that. And same applying for our third eligibility period of JobKeeper from the 4th of January to the 28th of March, making sure in each of those fortnights you have paid the minimum amount out to your employees based on those two-tier rates. Again, if anybody wants copies of these separately, just let us know. We're happy to email you the PDFs. Okay, so something else that's come out is that you might have a business that has been eligible for JobKeeper 1.0, but things have ticked along since and you're now not eligible for JobKeeper 2.0. But you might still be experiencing a 10% decline in your business turnover. And if that's the case, you are still eligible to access the Fair Work COVID-19 employee temporary work arrangements. So I've got a link there for you on the slide. It's probably important for you to go and have a look at those. But Fair Work has allowed certain conditions in this COVID period, and that period has now been extended until the end of March 21. So if you have your employees on varied working arrangements at the minute, but you're now not eligible for JobKeeper, you should have not been able to access those concessions. But if you have your business with a decline of 10% or more, then speak to us or speak to your accountant and ask for a certificate that proves that you are eligible to keep accessing those Fair Work concessions. So something to think about: if you were eligible for JobKeeper 1.0, but you're now not, but your turnover has declined greater than 10%. A reminder that the ATO has already commenced compliance activity for JobKeeper. And it's quite interesting. So we've already been emailed lists from the ATO of all of our clients that have been claiming JobKeeper, and that will be the precursor to the ones that they choose to have a look at. So I would absolutely do not even attempt to orchestrate your numbers to make yourself eligible for JobKeeper 2.0. If you are eligible genuinely, then absolutely you should apply. If you need to orchestrate your numbers, then you should not be applying. So let's be quite clear on that. You certainly do not want to fall foul of the ATO compliance activity. What will continue to be important is that when you do your testing for JobKeeper 2.0, that you keep your support documents. And I know when we test for our clients here, we keep very strong file notes with supporting documentation on how we perform that calculation to ensure that if the ATO does come asking, that we have that ready there waiting to support our clients in their JobKeeper applications. So if the ATO does come and have a look at you and they later deem that you are not eligible for JobKeeper, you have to pay that back. And certainly they will fine you, I have no doubt. Possibly they will charge you interest as well. But the problem that you've got is you've paid that money out to your employees already and you have no ability to recoup that. So very important that if we're claiming JobKeeper 2.0, that we absolutely are 100% sure of our eligibility. We always want to do the right thing, don't we? Okay, some tips and tricks for you. And I would ask you to start thinking about your questions and posting those in our Q&A as we move along. Okay, tips and tricks. So the ATO said is if you have any outstanding BASs, particularly for September 19 and December 19, get them up to date, get them lodged ASAP, because without those BASs, there is no ability to test for JobKeeper 2.0 eligibility. So get those up to date, absolutely. What's really important is that you have to prove your eligibility before the lodgement of the October 20 declaration by the 14th of November. So there's So this is just let's just go over this very carefully. So you need to prove your eligibility for the 2 fortnights in October to be able to claim that money back from the ATO. You have to have proved that before the October declaration is lodged, which is due on the 14th of November. So you'll recall that every month, at the end of the month, say for your September JobKeeper, you must claim that by lodging a declaration by the 14th of the next month. So that's what this is alluding to. You have to prove your eligibility to the ATO by the due date of the declaration for October, which is 14 November. So there's a couple of dates floating around that you need to be aware of. So there's the date in October, the 11th of October, which is our next point here. So the 11th of October is a critical date that you have to have made your minimum payments to your employees. And by the 14th of November is when we have to have advised the ATO that you are eligible for JobKeeper 2.0. Not a lot of time, but very important work to be done. If you are already enrolled for JobKeeper, you don't need to re-enroll, you don't need to reapply, but we do need to retest and we need to advise the ATO of that. Now, there's no clear detail from the ATO yet on exactly how we advise them. It could be when we are making that October declaration in November, there might be an additional field for us to complete there. We'll wait and see. Okay, just a reminder that if you are already claiming for employees, you don't need to retest for their eligibility. And very important for eligible business participants and sole traders that are already receiving JobKeeper 1.0, they basically just need to declare their hours worked if they are greater than 80 during February 2020. And I'm imagining that that would be on the monthly declaration. Also, something to keep in mind, it might be that you were eligible for JobKeeper 1.0 to 28 September, but then you might not qualify for that for the first stage of JobKeeper 2.0 based on that 20 September BAS versus September 19 BAS. So you might actually fall out of JobKeeper for 3 months, but if you then have a rough December quarter, you are able to re-enter JobKeeper and test on that December versus December BAS and try and get that JobKeeper for the last 3 months. Okay, so you might be getting it now, you might fall out of it, but you might get it again later. So just be clear that you can enter that JobKeeper program at any point in time, so long as you meet that revenue decline. Something to consider about the 80 hours test. So remember, 20 hours per week, 80 hours in that 4-week period. That includes hours worked. It includes hours paid in any leave component. So that could be annual leave, long service leave, sick leave, public holiday, carers leave. It could also include if you've taken time off to fight bushfires. Basically, the ATO is reasonably generous on what can be included in that 80 hours test. So just make sure you are across that. Okay, so I'm going to pop this PowerPoint off now and go over to some questions. Okay, fantastic. All right, so we're starting to see some questions coming through in the chat, which is great. And I would certainly encourage you to post those now if you can. All right, so fantastic. So I've got a question here. I'm a sole trader who is not registered for GST and I don't lodge a BAS. how do I test my decline in turnover? And that's a really good question. So if you are a sole trader and you are not lodging a BAS, which is what the current ATO tests are, then you will just simply need to add your revenue for the 3 months ending September 20 and compare it to the total of your revenue for the 3 months ending September 19 and do the revenue test based on that. So the ATO is allowing that for people that are not registered for GST. Another question from Lisa. Would we still be eligible for JobKeeper 2.0 if our decline in turnover for the September quarter was 29%? So the ATO, when JobKeeper 1.0 first came out, the ATO said there was a little bit of flexibility around that 30% test, but not a great deal. So I would suggest you need to be very cautious if you are at 29%. And it's because you want to make very sure that you do pass, because if you receive it and you're later deemed not eligible, then you're going to have to pay it back. So at 29%, I would be considering carefully whether or not you should be applying and whether or not that's too much of a risk for your business. So let's try and be clear that we get to the 30% or greater turnover. Thank you, Lisa. Okay, from Monique, you mentioned that you don't have to re-enroll for JobKeeper 2.0 if already enrolled for JobKeeper 1.0. What if you are enrolled in JobKeeper 1.0 but don't qualify 2.0? How do we notify the ATO, which is a great question. So it will be in your payroll system, you will need to finish the employees for JobKeeper. So the same system that you have followed currently when you've had an employee who has left the organisation, resigned, redundancy, whatever it was, you've had to finish them in your payroll system. So it will be the same thing. So there's particular FN codes to use to finish those employees. So I do have a number of bookkeepers on our webinar today, which is fantastic to see you guys. But yeah, just be mindful of that. You're going to have to finish the employees for any businesses that are no longer eligible, which is good. Okay, so another question. Do I need to include GST-free sales like exports if they are not included in my BAS sales figure? So we've got many clients that have export as part of their business, and export sales are actually included in G1 in your BAS. Where they are not included, where there's no GST included, is of course in 1A. So yes, you do include your export sales in G1 in your BAS, and yes, they are included in the testing for JobKeeper 2.0. Let me just be clear on something, and as much as we have published this information previously and explained it many, many times, I continue to find mistakes in clients' files, my files, Xero files, QuickBook files. JobKeeper and Cash Boost and the state government 10K grant, the apprentice rebate, all of those subsidies need to be BAS excluded if you're using Xero, or N-T if you're using MyOb. They should not be forming part of your revenue number. Please make sure that you haven't used a GST free code on those revenue amounts, because if you use that GST free code, when you do your BAS worksheet through your software, it will include those numbers in your turnover calculation, which is going to be incorrect. And it's going to mean that you might be looking like you have higher turnover for this September BAS than you wanted, and it might exclude you from that 30% drop when you're comparing to September 19. So really important, make sure, go back into your software systems and make sure, if you're a bookkeeper for every one of your clients, if you're looking after the accounts for a business, go back and look at those entries and make sure they are BAS excluded or N-T. Question from Lee. Based on having to pay employees by 11 October, but BAS not being lodged until 14 November, I will still be estimating some figures as we are reliant on external reports for revenue information. How strict do you think the ATO will be on comparing our estimates to what is ultimately lodged in the BAS? So the test is based on the BAS, Lee. So it's so you are going to have to be quite accurate, I would suggest, with your estimates. So if you're estimating numbers and you're using those numbers to to test that 30% decline, I would suggest that you need to be fairly accurate with that, because if your BAS, when you later lodge it, comes in and you haven't met that 30% decline, then you just don't qualify, and you will run the risk of having to pay that JobKeeper back. So if you estimate, Lee, and you think that you're eligible and you pay those wages out to your employees, and then when the final numbers come through and you are not eligible, then you basically, if you have received those JobKeeper payments, which you could well have, then you will have to pay them back. So you need to make those estimates as accurate as you can or as conservative as you can. Tough, I understand, but this is the set of circumstances that we have and we have to play to it. Another question. When does the 12-month rule start for casuals? Is it from the 1st of March as per JobKeeper 1.0? So we know that the rule for casuals is now 12 months from the 1st of July 2019. So make sure you are aware of that change for your casuals. Another question. If someone who works less than the 20 hours per week for the 4-week period, are they also required to satisfy the 12-month employment rule in order to get JobKeeper 2.0? So this is an important question, actually. So if you've got an employee that works less than 20 hours a week as a casual, but they have satisfied the 20 hours a week, do they also have to satisfy the 12-month rule? And so what I would say to you with your employees that are working less than 20 hours a week, it's going to depend whether they are permanent part-time or a casual. If they are permanent part-time, they only have to satisfy the greater than 20 hours per week to get the full Tier 1 JobKeeper payment. If they're permanent part-time and they are less than 20 hours a week, then they get the lower $750 payment. If they are a casual, at all times, they have to satisfy the 12-month rule. Hopefully that's clear. Come on, give me a call if not. We'll talk it through. Okay. What do we do with employees? Do we need to reassess their eligibility? And no, we don't. If they were already eligible for JobKeeper 1.0 and they have completed the declaration and sent that back to you, then they remain eligible for JobKeeper 2.0. Okay, so this is a good question, and one certainly that will come up many times. We've got a number of clients, and you might even be this sort of business that lodges your BAS on a monthly basis, not on a quarterly basis. And what do you do when you're testing September 20 versus September 19? Do you just test for the month? Or do you, or what do you do? Because the test is actually a quarterly test. It's using the September BAS, but it's a quarterly test. So if you are a monthly BAS lodger, what you need to do is you need to pull out your BASs for July, August, and September 2019, and do that same calculation that I've demonstrated in the PowerPoint, and you'll need to compare that to July, August, and September 2020. So you just add those 3 months together. So if you are a sole trader, if you are a person that is not registered for GST and not lodging a BAS, you're adding 3 months together. If you're a person that is registered for GST and lodging a monthly BAS, you're adding 3 BASs together. So at all times, you need to come back to that quarterly comparison. Question here from Ellie. Okay, so Ellie's got a question about a registered charity. If you are a registered charity, is your decline only required to be less than 15%? Ellie, yes, that's the case. Registered charities only have to satisfy a 15% decline, correct? There has been a lot of talk in the marketplace about sole traders and how much they will receive for JobKeeper. So it's going to be very interesting to see how this goes, because the JobKeepers have got to be able to somehow prove or somehow declare that they were working more than 20 hours a week in that 4-week period before 1 March. So those of you that are sole traders and those of you that have clients that are sole traders, there will be some sort of declaration that needs to be completed, but just start putting your thoughts to, can I support the fact that I worked in my business for more than 20 hours a week in that 4-week period before 1 March? It's going to be quite important. Otherwise, if you can't support that, then you will drop down to the $7.50 per week Tier 2 payment. Question from Angela. Do we still need to pay our workers in advance? And the short answer is yes. There's been a number of organisations that have argued that the JobKeeper scheme should be a scheme where the government pays you and then you pay your employees, but that's not the case. The government has chosen to stick to the principles of the scheme from 1.0, where you have to pay your employees first and later be reimbursed. Now, again, very important that those payroll entries through your systems go through those right or correct JobKeeper fortnights. So you're making sure that those minimum payments have been made to your employees by the end of that fortnightly period. Now, the second tier to that is make sure it's not just the payroll that's been processed as at that date. That money needs to have come out of the business bank account by that final date in that fortnight as well. Is there any flexibility around the 20-hour rule? So I believe that there will be a little bit of flexibility. So the ATO will have some discretion over employee eligibility. So if you feel that you have a good case that you can provide to the ATO why you didn't meet that 20 hours per week or 80 hours per month, then the ATO will certainly take that into account. Now, just working on the experience that we had with JobKeeper 1.0, there was a number of instances where we had clients that absolutely were eligible, but for some reason had made a mistake with a past BAS or made a mistake with a tax return so that their income wasn't declared properly. And the ATO had initially denied their application for JobKeeper. So in a number of instances, we've actually applied for basically ATO discretion to look at those different businesses and to assess those circumstances individually. So if you have a case that you believe genuinely should qualify for JobKeeper 2.0, but it's not meeting those cut and dried rules, then absolutely speak to us and we can speak to the ATO on your behalf and explain that circumstance to them. There's been a number of instances where we've actually had to provide written objections to the ATO on their denial for the JobKeeper. So, but the ATO has been quite complying once we have done that. So an important thing to do if that is your circumstance. Okay, so the alternate tests. So just to touch on those again briefly, there were a number of alternate tests issued for JobKeeper 1.0. And I would imagine that we're going to have a lot of people looking to those alternate tests for JobKeeper 2.0 that don't necessarily meet based on that purely BAS to BAS assessment that the ATO wants us to test on. So again, if you believe that you are eligible, that you have extenuating circumstances or you have a change in business structure or practice or acquisition, then that's when we will look at those alternate tests for you to try and make sure that you can claim that JobKeeper 2.0. Okay, so let me know if you have any further questions. Let me pose this scenario for you. So I'm a person and I have two jobs. One of my jobs, I'm a permanent employee, and the other, I'm a casual employee. What do I do with JobKeeper there? So basically, if both of your employers are eligible for JobKeeper, and one of which you are a permanent employee and one of which you are a casual, then JobKeeper is claimable through your main employer, which is your permanent employer. So we have to be very clear on that. Two employers, one's permanent, one's casual, JobKeeper comes through the permanent. If you have a situation where you are a casual employee for both of your employers, you might be a long-term casual for both of those employers. And if both of those employers are eligible for JobKeeper, you can nominate either to pay the JobKeeper for you, but you can only nominate one. You can't nominate both. If you have a situation where you are a permanent employee for two different employers, and you might, again, have both of those permanent employees, but employers being eligible for JobKeeper, you need to nominate. If you do equal hours for both of them, again, you just need to nominate one. You're not eligible under both. That's the rules pretty much across the way. Okay, well, I think that brings us to the end of our questions this morning, and I certainly thank you very much to everyone that has joined us this morning and certainly asked some questions. So after this webinar, we have been recording this this webinar, and it will be sent out to you, posted on our social media channels, and certainly feel free to distribute it to anybody that you believe it is useful for. If you have any further questions that we haven't covered today, please just come to us at Sullivan Dewing. We're more than happy to help you. This is a changing time, a trying time for many, a buoyant time for others, but certainly an interesting time for us all to get through. So I thank you for attending, and have a lovely day.